Thank you for all of you to join. I think these are the guys not visible in the market. Honest answer is you wouldn't have seen them often in the market. And I've been pestering each one of them like crazy, I think, to come across and guide us. And I think age has a benefit. A lot of people say age slows you down. Age builds network, right? So I got a chance. We worked together. I think me and Sanjiv have worked together, or we studied together. I was actually much older to him, maybe a couple of years. We were together in XLRI and then worked together in the city on the same project, digital transformation of MSME only, right? That's what we were doing, ELC Orbit, right?
No, not just XLRI, BHU also.
BHU, no, that was older, XLRI, BHU, right? And Manish, we got a chance to work with it, together in Kotak days as well, right? You're always on business, and we were the invisible guys just doing this plumbing here and there, right? And Divyesh was in audit, right? Audit, I think we were in city together. So good to see, and this helps, right? Because if they grow, maybe latch on kar sakta. And Saikrishnan, I'm meeting for the first time. But I think what you spoke about, I don't know why we never met earlier. So I'm just surprised. With age, you tend to meet. So thank you for joining us. I think the session is going to be deep and intense. An idea of this session came because कहते तो हम बहुत हैं कि MSME credit होना चाहिए, but होता नहीं है, बिल्कुल भी नहीं होता है, आसानी से तो बिल्कुल भी नहीं होता, right? It is difficult, it's complicated. So I wanted to reveal this out from those who are actually leading this ecosystem right now. And Divyesh, from your perspective, I will go straight to the question and get your insight on what's going to happen, right? So maybe a quick introduction of maybe what you want to speak about on the topic itself. But we want to hear from one MSA workflow where bank is embedded really well, and what has been the impact on the business side, right? What has happened? So maybe a quick view on what's happening out there and what kind of ecosystem building you can do on the workflow basis with MSMEs.
So first of all, I think a big thank you to Digital Fifth and team. This is, I don't know, what, fourth year? I mean, I think, ladies and gentlemen, I think big round of applause to these guys. These guys pull it off every year. It's not easy. We try to do it on a very small scale and we struggle, but these guys do it in such a large extent. So I think you have to give it to them. It's just fantastic. And this man's got crazy appetite to keep running around on the weekend. And so I don't know how he manages his family, but great work. So, I mean, coming back to MSMEs, I think what has happened is obviously, like we were discussing just a couple of minutes back, distribution is the king. I mean, whoever kind of owns the distribution generally tends to do much better in this market because clearly the opportunities are across the spectrum. The challenge is also that, like, we believe that if you go horizontal, then it requires a lot of effort. Right, and the minute you go vertical, it becomes relatively easier. I mean, you know what to focus on. So
but you want to quickly define vertical, horizontal.
I'll just get into that. So horizontal is like, you go and carpet bomb like a city and just acquire customers across industry segments. But vertical is when you do, let's say you do shipping logistics, you do, let's say you do FMCG, shipping logistics, pharmacy, etc. So when you focus on verticals, you generally go deep down. And you're able to do tier 1, tier 2, tier 3 on the supplier side. And as you go deeper, you actually get better NIMs. The challenge is also different, but you do get better spreads, right? So vertically works out much better is what I have seen across years, right? Whether you do classic trade or whether you even do just plain vanilla lending to MSME. So I think that in my view is where banks which have embedded better on verticals have done well. Historically, if you've seen, some banks have done brilliantly in capital markets, Kotak being one of them also, right? So that's a great example of how when you go vertical, and so you get the exchange, you get the broker dealer, you get the investor, you get the foreign investor, you get the retailer, and then, deep down, right? So once you go vertical, you have your ability to capture a larger part of the flow, and therefore, your ability to get better NIMs and ROE is much, much higher. So MSME also is the same story. I think banks, wherever they've embedded themselves vertically, in an ecosystem have done very well. Auto is the best example. It's to test of time. I think over 3 decades, I have seen it working. HDFC, Kotak also have been early movers. They've really benefited, right, in the ecosystem. First, as part of the anchor, and then you go deep down in tier 2, 3, 4. That works very well. So I think that's been the best success story, if you ask me. I mean, earlier, the digital wasn't so penetrated 2, 3 decades back. Now it's penetrated. So your ability to kind of onboard more is quicker. credit assessment has become faster. So digital has been a big enabler on the way, but fundamental principles remain the same in my view, that you go vertical, you go deep down. Sanjiv runs it beautifully in startups, right? They also do the same thing. Or to sponsor and you go deep into, startups in Series B, A, seed. So you go deep down, you again do much better. So as long as you have that in mind, I think irrespective of product, it will work beautifully well. Long answer, but try to cover it.
No, I think fact of the matter is we were trying to advise someone on MSME. So the point is there are 32 industries. You can be on supplier side, you can be on distributor side, you can be on tier 1, tier 2, tier 3. We ourselves are in the same segment. Right? You can be in 10 verticals and we are dead any which way, right? So I think this point which is very, very powerful. Manish, from your perspective, what are the MSME expectations changing, right? What has happened over a period of time? And how should banks actually align, or lenders should generally align to those expectations as well?
Actually, the big shift from an expectation point of view, see, the current world is so volatile and decision-making requirements are so quick, and you really need to be at speed. MSMEs also need to take decisions with the kind of volatility that they are expecting. From banking being a periodic activity, I guess the big expectation shift is banking being available like an embedded service, right? It's not something where, okay, I will see the banker maybe 3 times a year when a renewal happens or when I need a capex loan or when I want to open an account. It is about now on a consistent basis, is there a presence, embedded presence, which the banker can provide to my workflow as a MSME, where whether it is with respect to collections, payments, any kind of a service that you are, even credit on the go, all of that becomes dramatically more important now as compared to what. So from that expectation is where the MSMEs are expecting that, okay, the bankers will provide me credit when I need it automatically. Transactions on an instant basis, I get to see transactions, I get to see visibility of what exactly is happening. And so it has to become that much more integrated, that much more for it to be relevant. And I believe that is the big shift that is happening as we talk.
No, perfect. Thank you.
So I'd just like to add here, I think he's raised a very important point. I think fundamentally MSMEs, I think that segment, everybody has that line that you have, in terms of trust bar, right? And there are some people they like to really kind of get to know more, right? So I think with banks, what has happened also is the trust bar is relatively there, right? In terms of, you put your money and you put your savings and then you're getting loans also from that. So the expectation is not just collection payments and just lending, right? How can you get me onto GEM? How can you get me onto Trades? You may not be directly involved. How can you help me with GST? It's not GST payment, but how can you help me navigate challenges around GST? So I think it's just multifold. And the fact that it comes to the bank is because the trust element is very, very high, right? Because you're dealing with money and the guy saying, he's managing my money, he's managing my savings, and he's managing much more. To Kotak's point, I think they manage everything, right? The MSME is his own savings account, his son goes abroad, he studies the loan, everything. So it goes way deeper. So the trust element is very, very different. And therefore, I think the questions that come in to the bank are very different. It's not always linked to banking. It's much beyond. I think that's what we've seen in our last over a couple of years. Sorry, Manish.
No, absolutely. I guess anticipating needs and becoming far more proactive and is possible today because of the fact that you can provide dramatically more integrated services not only to the MSME as a industry but also to their personal requirements. And with digital data being available, there is that degree of proactiveness you can bring in basis how you see the data flow, which happens with the MSME.
No, perfect. Sanjiv, from your perspective, you work very deeply on new economy, right? I think it doesn't happen. I've seen Axis Bank changing direction and moving so well on the new economy side as well, right? So what is the expectation of this economy, marketplace, D2C, whatever areas you work on, and how the banks are able to do it, and what kind of infra or layers have to be created to support that kind of expectations?
So, I think I'll answer this question in 2 parts.
One is the infrastructure, right? So let's say if any of us are using any of the e-commerce apps on our mobile phone, right? What really strikes you is the UI, UX, and the instantaneous response that you get. You choose something, transaction just keeps happening, and why not, why just e-commerce? I mean, we can talk about a lot of fintechs as well, right? So you therefore, if that is an ecosystem that you're trying to serve, you cannot have a situation where these guys are giving instantaneous responses to the users, but at the back end when they're talking to the banks, the response is lagging, right? Because the entire money flow is integrated, and that includes, the clearing platforms that NPCI and RBI are running, right? So we in Axis have put in a huge amount of investment, recognizing that this is the future in terms of how the money flow is going to happen. Today, in corporate banking alone, we will have around 150 APIs serving different kind of purposes, which support balance inquiries, which support payments, which supports, pings on information detail about whatever credit our clients have got. So that's the infrastructure part of it. And the other part is, how do you provide credit to this ecosystem? Now, one of the, I think supply chain has existed for quite a long time, but at its core, the way supply chain has evolved is there's a small guy selling to the big guy, and the small guy is running a receivable from the big guy, and a financier comes in and discounts that receivable. But that's no big deal, because the big guy is always going to stay around, and the big guy is very credit worthy. So eventually whoever has financed that receivable is more or less sure that the money is going to come from the big guy. The challenge really in this ecosystem is that how do you provide the working capital for the small guy to produce the goods in the first place? How do you provide the capital to the small guy such that he is able to produce the goods in the first place? That is the challenge that we have tried to solve. And again, we are a beneficiary of the entire venture capital and to some extent private equity ecosystem that has gotten built in, where even if a lot of these folks, they do not have scale, but they are able to raise equity, and that gives us comfort as a bank, saying that because they have an institutional investor sitting on their balance sheet, we can fund their capital expenditure, which actually sets up the assembly line to produce the goods that they're going to sell to the big guy, or this guy can build an inventory of raw materials or WIP or finished goods such that they can supply just in time to the big guy. So we've kind of focused on this end of the spectrum on the MSME side, help them in transaction banking, help them realize money much faster from their clients, do just-in-time payments to their vendors, and so on and so forth, and bring the latest technology suite over there. And at the same time, have some intelligent solutions in terms of funding their capital needs. Yeah.
Brilliant, brilliant. Saikrishnan, given that you are running the bureau frameworks in the country, because the frameworks are changing, data is coming from new sources, and of course not new sources than just the banking credit data. So maybe any signal you think, dynamic signal which is coming from the value chains, which can help the banks in improving their trust on the entity, improving credit, because they've long trusted just one data point. So what's your thought that what more can come across, which can enrich the engagement in the market?
Yeah, I mean, from the perspective of where we come from, right? When we look at bureau, it's right. We historically been looking at data that's post facto.
Post facto, yeah.
Like, you had performance data that kind of comes in. But the way things have changed, the way things are moving in the country now, I think one of the critical things that we need to look out for is how well we're integrated to the workflows.
Correct.
And what kind of data that we can get from there. As a bureau, I might not really be able to access it at this point in time. But if you ask me what will make a difference, it will largely be the verified cash flow information that becomes very, very pertinent. More so because I think the cycles that now we are looking at, I think historically when you look at lending, you look at static data. And that doesn't really, in some form, tend to answer the questions of what's happening now. So from that perspective, I think with more and more digitization that's happening and ability to be able to access that data and share consented data at scale, I think that critically might be a big differentiator.
No, perfect, perfect. I think the entire theme running across these 2 days is supply chain. So I'm just jumping a question back to you, Divyesh. I think SCF has not got unlocked, right? It's still bottled, controlled or logged into that database somewhere and people don't know, and a lot of work is still in progress. What will unlock SCF at scale? How do you ensure that MSMEs get credit on time, real time, at a lower price, and of course everybody gets benefited? So what is that which needs to be done by anchors, what needs to be done by banks, and how do you ensure that the utilization also increases across, right? So you thoda utopian idea hai, but karenge to hai.
No, I mean, I don't think it's, I think it's challenging. I think in the recent budget, the finance minister did announce, I think that's anyway going to unlock a lot in my view.
You're talking which one?
No, this, I mean, fundamentally any supplier to public sector enterprises, right?
Yeah, the dates is coming
by
on
default, all the invoices will go on to trades. So if you'll rarely have a supplier in the country who only supplies to a public sector enterprise, it will be non-public, non-PSC. So if you assume like 70% is to non-PSC, all of that is going to move to trades, right? Because by default, you just educated the guy that, you can get at 200 basis points lower than what he's borrowing at, or probably even much lower. So all of that is going to move. So in my view, I think that is going to happen in any way. But I think what Sanjiv touched upon, and they've done it in a very nice way in the startup ecosystem. I think the crux of the matter is who would finance the MSME to manufacture? I think everyone takes risk on the buyer, fundamentally. Even here, everybody is discounting on Trades platform because the buyer is
there, right?
creditworthy. The minute you go down to a double B or a single B, I don't know how many banks would be there to discount. So the fundamental issue is who first discounts for a credit which is below triple B, and that is for acceptance and goods already supplied. And second is who gives money to the MSME to actually manufacture. And I think that's the most important part. If there is a way that the exchanges can actually integrate with banks for providing that financing based on history of things around how long he's been with the anchor, what's the return, you look at SMA, DPD, CMR, all of that. And if there is an easier way to crunch that to a score basis which you give pre-shipment, I think that's where the big move will happen. Because today the challenge is around giving money to the MSME to actually manufacture. And I think the exchange is, this move will actually give us more data and information to go to the pre-side. And I think that's where...
That is pre is required, right?
Yeah, that's where I think globally that's where the challenge is. Even in India it's the same thing. All the information you get, but it's still the anchor risk. I don't think that's changed. Yeah, sorry.
I think the challenge of pre is more from the point of view of how do you build scale. I recollect at Kotak we had put a pre-shipment financing program for Maruti vendors in 2004. Yeah, but that was because the automotive value chain is very, very strong,
different.
And there is data to say that, okay, what procurement somebody would do on a monthly basis. And we had created a program for vendors of Maruti. But it is not at scale, right?
Scale.
How do you do it at scale is the challenge in terms of when it comes to pre. Because the predictability of the event is what will decide how do you really provide that financing. Post is always the easier part, whether it is an anchor-led or even somebody you can pull GST data in terms of whatever invoicing somebody has done and you can provide financing on the fly. But that's always the easier piece to solve. Pre is the more challenging piece.
There's another challenge which is, tier 2, tier 3 vendors, right? In a way.
Yeah.
So, the tier 1 vendor is the one who's selling to the anchor, but the tier 2 selling to tier 1, tier 3 selling to tier 2, that is again one challenge which, we still don't have a scalable solution. I believe there are some technologies, tokenization and blockchain, etc., which hold the potential to solve this problem, but haven't yet seen any commercial scale deployment of those technologies. Yeah.
No,
Yeah,
perfect.
so he's right actually. I think the...
So when you have experts in the room, you don't have, like, moderator has no role. I'm very, very happy listening, right? Because this is the discussion I wanted. Absolutely.
No, so I think the key what Sanjiv is saying is also right. Like the trades actually endeavors to get to what he's saying, which is tier 3 supplying to tier 2 and tier 4 supplying to tier 3. It endeavors to get there because you get the micro selling to the small and the small selling to medium, because now everybody has to be on the platform. Which actually in the good old days in 2004, like Manish mentioned, it was only the anchor and tier 1. It never went below. So that's the first part which will solve. But the pre will still be an issue. I think the only piece that will happen is the CET MSC. If you are smart enough to kind of embed it in, then you can run with the risk. But yeah, I mean, you can't go above 10 crores and there are some challenges around it. But fundamentally, you can figure out a way to solve, and if you can go unsecured, it's beautiful, right? I mean, these guys don't have too much security. So if you can do that, go to tier 2, tier 3, I think you can solve some part of the problem. But yeah, scale, I agree with him, is a bit of a challenge.
Manish, the question to you is that how do you build scale? Because fact of the matter in CD days, I was supposed to be managing supply chain finance platform and all. It is complicated, utna samajh mein nahi aata easily, right? And it's very difficult for people to figure out which product is what and what does it do. Factoring, reverse factoring, is so much of stuff like that. So maybe you can at least categorize which category should scale well, and how do you support the system?
See, the anchor-led strategy is the easiest one, undoubtedly, because it takes away the risk asymmetry as well as it also takes away the trust issue, because there is an anchor which kind of validates both the pieces, whether it is the invoice or the date on which the payment is expected. And the scalability will necessarily come only through a platform. As more and more invoices start to move onto the platform, even the tier 2, tier 3, tier 4, like Divyesh was saying, either there will be risk mitigation or a risk sharing strategy which may come through a CGTSME or in some other form. But definitely the platform takes away two critical pieces, that there is no worry from a trust point of view, there is no worry from the point of view of validating the invoice which you are financing. And that can go down to tier 2, tier 3, tier 4 vendor also. It's a question of, yes, okay, the double B, triple B or whatever below that, who finances it. But I'm sure there can be clearly risk sharing strategies that will emerge, where that kind of financing will also come about. And over a period, the performance of that particular piece will start to drive that volume that you will get to see. But a platform, in my view, is a must for scale. Otherwise, you cannot get to scale on that.
And maybe a link question, maybe this can be attempted later as well. Kitna bada ho jayega market, right? Because it is still insignificant. Maybe out of the entire credit which has gone to MSMEs, this is still less than, maybe some people say 5%, 4%, 8%. What scale can it come and what will it replace?
See, in my view, we should not look at it from the point of view of replacement. I think it will aid the financing that you do. Today, suppose when we are evaluating MSMEs and we say that, okay, there is a certain amount of credit you will look to provide, basis whatever risk adjusted matrix that you really run, and collateral will be a challenge, etc. Then you say that, okay, I think part of my limits, credit limits, can be supply chain to that particular MSME. So part of the limits could be my regular funding which can take care of the pre-shipment part, and the rest of it could be far more predictable cash flow backed part of lending. So it need not be a parallel ecosystem, it can always get embedded in your overall bouquet that you really provide to a customer in terms of financing. And that is what will happen more and more as the banks also create the data-led platforms, and it becomes easier to provide that financing as compared to saying that, okay, you bring all the invoices to my office and then I will evaluate and then provide financing. All of that will become digital, so it will become easier to provide that credit.
No, basically, we are waiting for that UPI moment in this segment, right? And this may have more impact on the ecosystem than maybe UPI would have done, because this changes the way the production will change, right, in the market maybe.
Yeah, but you're right. But I mean, you'll also agree that UPI and IMPS did not work well together, right? Fundamentally, both coexist, but one is done superior, I mean, much better than the other one. So same thing, if you have a CCOD product and a supply chain product, you can ask any MSME in the market, he will choose an OD product, right? Because transactional finance is very different for an MSME compared to an OD, which is fill it, forget it, I have ability to move.
Correct.
So when you have two rails which are running like this, one which is very convenient, it's very difficult to push to a transactional side because he has to keep coming back. The guy has to keep coming back and giving you invoices. Well, the other one is very simple. You have a limit, you keep drawing down, there is no reason. So even if you see RBI data, you look at tier 2, tier 3, tier 4, what is the highest utilization? It's still OD first, then WCDL. Trade is far cry.
Yeah, that's what maybe.
So that is consumer behavior telling you what they prefer.
And consumer behavior, you give me bad products.
Buying behavior. Buying behavior of MSME. That's what
I personally believe it is for the banks to remove the friction.
Correct.
Yeah, because if today I have the ability to pull data directly from the GST site and I can plug it into my system and discount and the money comes directly into the CC account of the customer will be fine. Because otherwise I'm going to restrict the overall financing that I would provide to the customer basis, collateral, etc., etc. But because this financing is far more validated, I may be in a better position to say that, okay, I'll take a higher amount of credit call on a customer. But unless the friction goes out, what Divyesh is saying is right, people won't adopt it so easily.
No, perfect. Sanjiv, so maybe we spoke about verticalization and you've seen verticalization like crazy, right? So what's your perspective on verticalization, how SCF can help? And of course, if there is something we can do on the export side, because the cross-border is also a big challenge, right? How do we support that? Because that's where you'll sort of help in balancing the challenge of currency as well. So what can be done there? We have seen threats has grown, right? But that's not happened on cross-border. Cross-border is just not happening. The entire license is just there. It's just not grown. We have obviously FSCA leadership actually taking a session there. But I'll be honest, we've seen threats and non-threats. Threats is, I think the number right now is 300 lakh crores or something. Like 3 lakh crores is the overall transactions on that. NEUM is around 85,000 crores. Whereas this side is millions, right? Very few millions. So what can happen across board? Any views on that?
No, first of all, I do want to make the point that this is a large ecosystem that's kind of, there's a large demand which is coming over there. And we just need to rewind what has happened and to see what has happened in China, right? The way, a platform like Alibaba became a platform for, millions of MSMEs in China supplying into the US. And other advanced economies, there is no reason why a similar platform and a similar scale on cross-border cannot come in India. It's just a matter of time. And therefore, what is it that we can do? So you spoke about FCI, and all of that. So that is definitely there. But, if you look at their coverage is not total, right? So one of the, therefore the strategy that we are trying to follow in Axis is that we build pipes with all the banks, right? And we are not just, and when we talk about banks here, for example, we are not just talking about the large global banks like Citi or JP Morgan, etc. But it could be, let's say, a Lloyds Bank in the UK. And, or, it could be some of the local banks in Spain. So there are lots of, and all the bank, or it could be, let's say, a Dresdner Bank in Germany, right? So the idea really is that we build pipes with these mid to large scale banks in each of the large economies, right? And today, Axis Capital is having their annual investor conference. So the chief economist was there, Dr. Nageshwar Rao, and he gave a very simple statistic that with the FTAs, 70% of our exports are covered in FTAs. But the FTAs have been signed, you can count them on your fingers, right? They're not like, there's one with UAE, there's one with New Zealand, we've done it with EU, and now we've done it with the US, right? So cover the top 10 geographies in your exports basket and build relationships with, 4 or 5 banks and build a platform where, you can send them inquiries that I have a client, who wants to take risk on this counterparty bank with you. Do you have capacity on them? And then, in a way, we build our own FCI kind of a network. So that's the way we're trying to look at it. It's a large opportunity. The challenge is in execution. But we are very focused. We believe this is a strategy to take this forward, on the export side.
No, absolutely. I think that I'm sure government is also supporting all the time. So one key point to all of you, right? If you do retail lending, beyond a point, you will have pushbacks from the ecosystem. But if you are supporting MSMEs, everybody will be with you. Government, regulator, everybody is supporting it. So I think this is the right area to build. And it's not the easiest. It's not for a weak-hearted, honestly. So maybe from a Saikrishnan, from your perspective, and be ready with your questions. I think the next question, after this question, we will ask you to take one or two questions. So Saikrishnan, what are the unique initiatives Experian is taking to help in scaling MSME credit? What exactly are you guys doing? Because you are known to be innovative in the market and you have done a lot of work which is fresh to the market,
I'll put it this way, like the points that they've been making, right, in some sense, how do you make sense of all the data that we kind of get in? Historically used to looking at things in a certain way, and scores for MSMEs really don't exist in the formal manner. It actually helps. So how do we bring value to it? No, we try and kind of bring, and the leverage that happens. When you look at the cross linkages that exist, right? So when we speak of MSMEs, we typically tend to kind of look at it from the standpoint of entities in some form. But what we also see on the bureau in a very big way is that a lot of the people that typically tend to borrow there in that space also have borrowings in a personal capacity.
Agreed.
And that's a very large overlap, upwards of 60-70%, especially the smaller ones. So how do we kind of leverage that and that data? And that's something that's one of the things that we've been actively working on. How do we create attributes that leverages on information that's available across the different bureaus that we run, and make that relevant and a pertinent option for people to look at. Again, segments that we look at, the insights that we can provide, basis all of the data that kind of comes our way. Those are things that we do on a regular basis today. What we are also looking at is how do we then build modeling capability. One of the things that banks typically tend to look at is what kind of information that's available for them to be able to build models, deploy models at scale, and the test beds that are required to be able to do that. A few things that's kind of worked well for us globally and what we are now bringing to the country is that ability to be able to make that test bed available, that people can quickly come and model and take that, because the pace at which models change when you're looking at decisioning happening, that's kind of crunched. What used to be 2 years and 3 years, we find models kind of not holding even 6 months down the line. So that ability to be able to do that and then take it to market faster. So those are things that at this point in time we're working on. And like I said, I think the ecosystem is evolving very fast. And one of the things that we are looking to see if we can work well with is the ability to be able to bring in all the different components of data that exist, especially where we're looking at cash flow assessments and help kind of take that to market faster.
Oh, superb. I think we'll have a chance to have a few questions from you. Okay, we'll start with you first. Maybe you can quickly introduce very short and keep the questions short. Okay.
Thank you. The entire panel, it was pretty informative. My question is open to the entire panel. My name is Reema Sonkar. I'm a founder of an investment boutique firm. So in the next 10 years, I would want to understand who would impact the MSME space more. Will it be the companies who are managing data, or the banks, or the fintechs, or the platforms, and why?
So maybe a slightly different take. MSMEs are also shifting from the perspective of expecting an experience. So anybody who's in a position to provide a end-to-end kind of an experience, which means that right from discovery to onboarding to underwriting to a documentation to a servicing, which is completely seamless, which is predictive in terms of anticipating a customer's needs on the go, on the fly, and providing all of that in a medium which is significantly more digital. I guess those are the players who will be in a position to have an edge when it comes to getting the mind share of the MSME customer. And this is something which is evolving. I guess bits and pieces are getting solved. Somebody solves the onboarding experience, somebody solves the underwriting experience, somebody solves the documentation experience. But how do you really stitch something which is end-to-end seamless? Because nobody wakes up in the morning wanting a loan, right? People wake up in the morning to say, hey, I need to make this sale to that customer. I want to grow my business. I want to ensure that my payables come on time. Do I have the cash flows to ensure that I can take care of my day-to-day payments? But nobody wakes up in the morning thinking of a bank saying, "Arey, loan milega ki nahi?" So which means the experience has to be solved for meeting the end objective which MSME customer would have. And my guess is that is the biggest shift that will happen, and it is only a question of time. It will happen. Nobody has solved it end to end, because there is friction on the way in multiple ways, more ways than one. But as the overall ecosystem starts to throw up more and more data, I think it will get stitched. That's my take.
Maybe I'll just add to that, the way we see it right now. Eventually, I think you have data sets across. What will possibly stand out is the ability to be able to bring it all together, orchestrate. So platforms, in my view, will be something that will become very critical as we go forward.
So, all of us over here, we are all parts of very large banks. Axis is 100,000 people, ballpark, 6,000 branches, etc., etc. So, one thing that I've realized is that for large organizations like us, we will never be the only provider of financial services, including lending, including supply chain. We've tried very hard, and we have businesses at scale which are serving MSMEs. But if you look at the scale of that business versus the market opportunity, it is still a drop in the ocean. And the fintechs are doing a great job in terms of being agile and constantly adapting and responding to what the MSMEs want, right? So in my mind, I think we are looking at a partnership-driven ecosystem where a lot of cutting-edge agile solutions being provided by fintechs, and the banks kind of sitting behind them as partners to provide liquidity to take this forward. And of course, as some of these MSMEs scale, they will probably become direct relationships of the banks. I think that's probably the way this will go. And, I think we are very soon going to be the third largest economy, et cetera, et cetera. There's a humongous opportunity in this country. No single category of the ecosystem provider will be, providing everything to the MSMEs. Yeah.
We have time for maybe one or two more questions.
I would like to give one suggestion for the group. We all know that the MSME sector really needs a lot of support, and we also know that the data availability is not there. Way back in 2015, Udyog Aadhaar was introduced. I still wonder that how many MSMEs have been brought on the Udyog Aadhaar platform. I think this is one task that people can think of, that all MSMEs in the country, they are brought on the Udyog Aadhaar platform, and Udyog Aadhaar registration is like a Aadhaar registration where you are categorized into particular categories and all that. Relate that database to the credit bureau data. Find out how many are not there in the credit bureaus, it means they have not received any credit. And some kind of a gap analysis can be done to really identify and support those MSMEs. I think that is what a task I thought digital world can do. Thank you.
No, sir, actually, I'd like to add out here. It's an interesting point. So I think efforts have been made. It's not that it's not. It's probably failed. And I can tell you from my own personal experience, my wife has spent 3 years to get registered on GEM. She has done at least 50 phone calls to GEM to figure out where they're getting stuck. It's a micro entity with 45 people running a small orthopedic appliance shop. I don't think it's fair to expect a micro entrepreneur to figure out the nuances of how to register on some of these platforms. And I think that's why the struggle is more. So actually, if you see fundamentally, why are they behaving the way they are behaving? Because if I have to wake up in the morning, like he rightly said, I am not waking up to avail finance. I am waking up to sell more. So my fundamental thing is I want to sell more, right? And if any platform is going to take me so much time to register, it just kills, right? And look at GEM. They are saying mandatory 25% has to be bought from MSME, still the registration not in. 5% of it is only women entrepreneurs, even it's not going in. Now the fact it's not going in is telling you that behavior is holding it back, which means when you call, the help is not there for the micro. So the micro is going back and trying to figure out, should I register here or should I sell more? So they go back to the old ways. So it's like how, digital took time to adopt. So you're right actually, sir. But the challenge is how many fronts they will go when they're saying, oh, you know what, I'd rather sell more than do the other way around. So I think that's the dilemma that most of us also have. Because when you go in, they're trying to solve that part of the problem.
I only wanted to suggest if there can be some good app which is available at the tier 3, tier 4 level for them to register. Because today, unfortunately, although the Udyog Aadhaar was created, let me tell you, I am Mount Angsale, I am former Chief Executive of Indian Bank Association. So I had taken that initiative with Mr. K.V. Kamath committee, and this was achieved. But I don't think that that kind of a database has been created. Incidentally, I sit with Sai on his board, so I think there is a lot of opportunity for us to create database to identify the gaps and then collect. Of course, trades is one thing, but again, how many tier 3, tier 4 guys are supplying? How many of them will be funded by the lender through the trades? Because even the tier 3 buyer, I don't know what is his credit rating and all that.
Nobody is getting in tier 2 as well,
so,
right? So,
it's very good to say, but then real implementation would be a big challenge. So I think some base work can be done with the help of the young generation sitting here. Thank you.
no, perfect. Thank you.
I think he has one.
Yeah, okay, sorry. Maybe can you just share the mic? Maybe we have just last question possibility here.
Hi everyone, I'm Sandeep Swami. I'm the co-founder for a firm called Kistope. It's a startup, and we're exactly trying to solve this problem of pre-shipment finance, where when you are supplying to a large OEM, the MSME or micro small manufacturer, how does he get the finance to execute that, right? We have not reached much scale. We became operative 6 months back. We're trying, we have 2 partnerships. But the key thing that we figured out along the journey is that, see, it's a chicken and egg problem. We spoke about scale also, right? That banks don't see this scale, or how do we scale it up? Now we also see that the product fitment that has to be done right now, a little change from a product perspective, from how you sort of provide that finance. Banks probably first want to see a scale, whereas we want to see that if you make these tweaks, probably we'll be able to scale faster. So how do we solve this dichotomy?
So I think the challenge is multifold, right? There are different approaches to this. We believe vertical is the best way to do, because you have visibility on how that animal is moving, right? So like Manish mentioned, auto is a best example, right? If you know post GST, it's been working beautifully, tier 2, tier 3 is working, you don't mind taking calls on pre-shipment finance and moving ahead, right? I think some of us, they've done a fantastic job on using CGT, MSE, leveraging it significantly. I think that, in my view, to even what Sir mentioned, I think that should really help a lot. The question is whether banks use that as a way to do unsecured, because actually you can do, who borrows, you can do up to 10 crores, right? So fundamentally you can go right up to like 13 crores of lending to the guy, and if his working capital cycle is assuming 90 days, he can churn a lot more, right? So you can actually touch all of micro in this country through one CGT MSE cover. So you don't need much, in my view. As long as you can do that and catch a vertical, I don't think it's a challenge. The issue is how many such anchors will come in, and whether you have the ability to get the post shipment to liquidate the pre, because the challenge is not just lending, right? You want to be in the flow right through, and that's what I think he was also mentioning. They started because they had visibility on the post, and that's why the pre started moving well. Otherwise, you might as well do CCOD, right? So if you want to do the backside, you have to get the front to kind of pay you. So it keeps churning pretty well. That's how, trade would work. But sorry, Manish.
No, you kind of hit the nail on the head. I was about to say that you will have to take care of the end-to-end piece. Yeah, so only pre is not going to solve for it. How does the anybody who comes in as a lender will need a solution which is end-to-end from the point of view of post-solving for the pre. And there is appropriate validation of the data on which you can really ride. Because otherwise the loss given default numbers will look so high that you will, when you start to price it into the model, it will not really work.
Yeah. I think with this we pause, but I think these are the sessions which maybe honest feedback is we should do actually more like a webinar where we can do a longer sessions there. I am honest about it when we were planning the session. I think I was worried that you guys will join or not, honestly, because this is where the crux is. If those who are players are not going to talk, then we will end up with somebody who's not that deep into it and we will not be able to do it. I'm also worried that participants will not be there, right? Because nobody likes this cryptic, deep stuff, which is painful to understand, right? Many of you may be finding it tough, but this is where the mine is. The gold is there out there so deep, you have to extract it out. It's not the surface level business models are gone. I can't say I'm X or Y. That is gone, right? I'm in this country, that platform is there, I'm just doing the same thing here. That segment is off, right? So we are in a world where it's tough, and I think somehow I also feel that in 3 Idiots, Amir Khan used to sit in any room where the nulling was there. I think that's how I am feeling it. I'm just picking up more and more knowledge. But thank you for great sort of session out here. And some of the stuff which you was talking, I don't even have a question for that, right? Because I don't even understand that deep. So thank you for that session. Thank you, everyone. Thank you. Thank you, and thanks for being a very passionate audience. Thank you, guys. Yeah, maybe let's do that. Thank you, sir. Thank you. We'll meet someday. Thank you. Thank you, Sanjiv. Last friend. Thank you. Maza hai.
Thank you so much to all the speakers right here.
Thank you, Manish.
That's a token of appreciation from our side to you.
Thank you. They keep shouting कि तुम center में नहीं आते हो. अच्छा. Okay. Yeah. Perfect. Thank you. Thank you. Keep it back.